when I was talking about ranges, yeah, I forget to actually emphasize on it. Like there's something I missed that I was supposed to like explain. Fine, some people will understand it already, but you know, the purpose of this session is not really that most of you guys are totally novice. It's just emphasis that you guys need. You understood? Like you need, and again, you need just emphasis, like a very quick reminder to tell you that don't neglect this thing. It is very, very important. So I forget to make emphasis on some stuff when I was addressing ranges, which is what I'll be doing today. And the trick I said I'll be explaining to you guys, and some other new stuff. Okay. So, and again, for the issue that you guys said, you keep seeing some videos at the left corner of the video. It's as a result of people that turn on their video. And again, if you turn on your video, you are literally reducing. Oh, how can I put it? You are literally adding to the number of megabytes that the Zoom is consuming, which is going to let it require a lot of very strong network before it can deliver. So if you don't want to see that stuff there again, everybody should turn off their video. You have to turn off that video. So that's why you guys, you are only seeing those people that are on their video, not from me. It's not from my end. Okay, so I urge everybody to off that video right now. So I urge everybody to off their video. Which comes first? Which comes first? You guys, calm down. Calm down. Which one comes first? Is that one that you want to eat or you want to learn? Must you ask questions? I just remember something that I need to pass across to you guys. Not like anybody reminded me. I was the one that feel like I need to. And the next thing is which one will come first? Okay, I've disabled it. Okay, that's fair enough. So now, going back to the ranges here, I taught you guys two types of range. I said there is a ABC range. And there's I want to show you the simple rules. Like, if all of you can follow this when you are analyzing, it will be easy for people, it will be easy for you to make mistakes, and it will be easy for me to correct your mistake. Because when it comes to trading range, yeah, everybody needs to mark the same thing. If you are learning from me, after this thing that I will be explaining, you have to be marking the same thing. So which means if somebody is marking a different thing, we'll be able to tell the person that, oh, you made a mistake here. Because if we have a fixed way, a fixed direction that everybody follow, it will be easy for us to track those people that are not really grasping the knowledge, right? So now this is the first type and this is the second type. And this is the second type, sorry. So now, and this is the liquidity right here. This is the high and this is the low. Now, in these two ranges, there are things that I should have explained, right? So now, in every ranges, there's always a point that is strong, and there's always a point that is weak. So now, strong and weak. So what is the strong high? You guys must have been hearing strong high, weak low, strong high. What is a strong high? Basically, the simple explanation of a strong high is a high that takes care of what? Okay, this is the first type of trading range. This is the second one. And the third one is this. Sorry, it is theory. What is a strong high and what is a weak low? right? A strong eye is the eye that take a sort of liquidity before shifting direction. That is just a simple definition of a strong eye. And a weak low is what, as the name implies, it is a weak low. But how would you identify a weak low? That's what I'm going to explain to you guys now, because it is very, 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 very tricky. So now, looking at this first trending range now, everybody will call this a strong eye, right? Because it took care of this liquidity and a break structure. Correct. Everybody will call this one the strong eye because it takes care of structure 1 and it took care of structure 2. Because for a market to get to this point, and all of a sudden it started printing and it took out 2 major structures, that means this point is strong. And for this one, for a market to what, create a new ABC after an existing previous wave, that means this point is a strong eye. And so I'll be talking about strong eye now. All these points now, they are what, anticipated weak low. They are anticipated weak low. So now, how would you know a weak low? And what is the purpose of a weak low? For every strong eye, like I said, they have to be a weak low. So now, let me now draw this for you guys. Let's say you have this. Liquidity. Market took it out and market is here. If you call this guy a strong eye, and let's say this is where market is as at now, where will you call your weak low? Are you going to call this guy your weak low? No, because a weak low is the origin of retracement. And we know that a retracement is simply a move that we know that it is only coming for market to, for a particular push to be discounted when it is going to eventually be cleared, right? A retracement, we know, for the word retracement means market just wants to retrace. It wants to give a discount before continuing to a desired direction. So looking at this present price right now, will you call this guy a weak low? No, because there's no sign of retracement yet. Let's say you now have this again. Will you call this a weak low? No, no sign of retracement yet. Let's say this. Do you have a weak low? No, no sign of retracement yet. Not until what? You have a break of structure to the bullish side. So once you have a break of structure to the bullish side, that has tell you that, okay, from this existing sell, and for a retracement to be made, market needs to pull back. And for a pullback to be made, market needs to buy. And for a buy to be made, some minor structure needs to be broken. So for you to know that, okay, this buy has wanted to start. So looking at this chart now, you can see that this one has broke internal structures now. So which means retracement wants to start. So now we have a strong eye and a weak low. So this is our trading range. Strong eye and weak low. I'm not done with that yet. The same thing applies to this. If this is just going like this, you don't have a weak low yet until it breaks structure. That's when you can say, oh, they have want to start the retracement. So that means you now have what? A weak low. This is your trading range. The same thing goes to this. If this is your strong eye, where is your weak low? If this happens like this, you don't have a weak low yet. Weak low yet. Weak low yet. Until what market does this? That is when you now say you have a weak low. So this high to this low is your trading range. So now, here is now the twist. The next question is, okay, I understand, okay, this is my strong eye, this is my weak low. So the next question is, where is weak low going to stop? Okay, like where will this get to before it stop and it continue? Where? That is now where liquidity comes in. You need to do something. This is very, very easy. After identifying your strong eye and your weak low, there's a final investigation you need to make. Now, let me break it down. Now, you have your liquidity like this. Market took this out. And you have break of structure. No, I'm coming. Then you have market took this out. Then you have this. Then you have this. Then you have this. Then you have this. Strong high right here. Weak low right here. So after drawing my fib, that is the first thing. After I have seen my strong high and I've seen my weak low, I am going to draw my fib. And what am I doing with my fib? Remember, this, when you go to a lower time frame, that's when you will be seeing this. But on the higher time frame, you will be seeing it as a single push like this. So now, looking at this guy, I want to draw my fib. And what will I be doing with the fib? I want to see that, I want to know where my 50% level is. Because we believe this market needs to move to a 50% level before we can sell. So now let's say this is my 50% level. After getting your 50% level, what is the next question that you're going to ask yourself? For a retracement to start, the purpose of retracement is to what? Is to come and take care of internal liquidities. And why does it need to do that? Some people have gotten around here, sell. Some people got in around here. When this market broke structure, they might have trailed their stop loss to this guy. Some people got in after this breakout. A lot of people have participated around here. A lot of people have sell here, sell here. So the purpose of pullback is to reduce the number of participants in this push. So that is why pullback would come, take all this money, including the major money right here, which is the break and retest, then sell off. So the question you are going to ask yourself is, okay, this is my 50% line, right? So which liquidity is sitting down around this point? Which valid liquidity is sitting down around this point that above the liquidity, you have momentum? And what do I mean by momentum? You have imbalance. So which means at all these 50% levels, you are asking, where is the money? You're asking yourself, where is the money? If you can't spot any money here, that means you are, I will tell you, you don't need to trade this setup. You have to wait for something else that I'll be explaining later. Right? The same thing goes to this. After you mark your 50% level, the next question is, where is the money? So then, when you now get where the money is, then you'll be like, okay, this is why this market wants to pull back. So which means they need to take care of this money. We have minor money and we have major money, because inside the O leg, there will be an external and there will be an internal. But we know in this O leg, we are in what? This O leg is an external push outside. But like I told you guys, inside an external, there's an internal and there's still a sub-external inside. Because every time frame has its own order flow. And every order flow has internal and external. So, knowing the fact that this guy created a high to a new low right here, it makes this guy an external liquidity because it's an outside range. But we know that this external is still inside this our trading range. So which means if this is the most visible high that the market needs to clear, that simply means this, and it's actually close to our 50%, that means market needs to get there. And after market getting there, you need to see your what? Momentum. Because you need to see a sign that there is an inefficiency of price right here above your 50% level. Then you can now say you want to sell. So which is, after getting your strong guy and your weak low like this, the next thing is, where is the money? So above where the money is, you need to see what's in balance there. Once you get your imbalance, that simply remind you the rule of momentum and distance that I explained. So which means this liquidity right here is your distance. Why this is your momentum? The market will clear the momentum to the distance. No, market will clear the distance, which is the liquidity, then trigger the momentum, then sell off. Am I making sense, guys? Guys, am I making sense? So for you people that does not really have a direction, I just summarize everything that I've been literally explaining in a simple way. If I mark my trading range, 70% of you guys need to mark the same thing, because trading range does not change. It's the same thing that we are both saying. So which is, it is what I am doing inside that trading range that will not be different. Okay? Now you know where you take primary and secondary, SS1 and SS2. So my own is internal, external. Internal, inu, external, ita. I don't know where you take primary and secondary. Because I'm having stress around here. Primary and secondary. What is primary? People that does not understand forex will be like primary. But when you say external, internal, everybody will know that external means outside, internal means inside. Primary. SS3. So you guys should stop laughing at it. It's funny. You guys are not serious. Why are you laughing so hard? What's funny? Oh, you don't really understand Yoruba. That's why. Sorry, They have left you behind. Italawa. He learned it from your post. I've never said primary and secondary before. I've never said anything like primary and secondary before. I don't use that word. I used to remember the words I used to use. And all my words are always direct. Do you understand? They are always direct. It's what everybody can relate to. Do you get? So I've never used anything like primary liquidity, secondary liquidity. Nah. No, he didn't name it himself, actually. He must have heard it from some idolos. So I guess we are clear with this one. So now let's go to the chart now. Let's go to the chart and look for chart examples. Let's go to the charts. Now, come in. I'm coming. Let's look for examples. Let's look for examples. Let's look for examples. I'm trying to look for examples for us. Trying to look for examples. Ó ti lọ fàáfàá. Amúnudù. Inú mi dùn. Okay. I'm still going to break down these entries for you, but let's try to look for examples. There are examples here though, but I want to look for something much more visible. Okay, let's use this one. Come in. Yeah. Just kindly wait till I'm done. Then you will get whatever you want to get. Trying to look for a very, very clear example for it. Because when it comes to real life markets, things would change entirely, but it's still the same thing. Okay, let me go to 15 minutes. I'm coming. I will see a clearer view there. Let me see 15 minutes. I'm coming. I'm coming. Are you ready? Okay, yeah, this whole order flow has explained it. Okay, now let's use this order flow here. Now, looking at this, we can see this bearish order flow, obviously. I'm coming. We can see this bearish order flow, which is cool enough. So now we have what? We have market creating, sorry, I'm coming. Market creating a low. Oh, how will I get this thing properly? I'm coming. I'm trying to make this thing much more visible. I'm coming now. Let me use another tool. I've seen another tool. Let me zoom out this. So now, after the mitigation of this guy, right here, market did what? A, B, C. A, B, and C. So when market did this A, B, C, what do you now notice? You notice that this A now, this is my strong eye. So now where's my weak low? My weak low is right here. So being my weak low, I will draw my feed from this eye to this low. After drawing my feed, where's my 50% level? My 50% level is right here. So the next question I'll ask myself is, where is the liquidity? So the liquidity must not actually be exactly 50% level. But looking at this chart, you can tell. So let me delete this fib so we can have a clean chart. So after seeing that, you will see that we have this liquidity right here above what? I'm coming. This liquidity right here. You can see, and we can see that after that liquidity, what do you have? You can see this inefficiency in the middle. So that inefficiency in the middle, that is your momentum. And everything that happens here, this is your distance. Let me go to a lesser time frame so we can see much more image. I don't like as it shrink like that. I want to explain this thing properly. I'm coming, guys. Have we got in there? I'm coming now. Okay, yeah. I've gotten there. Is there? So now, looking at this chart now, so you can see, like I explained, so this guy is our A, B, C. So you can see that this C leg, which is the weak low, it broke this structure. So which made this guy the weak low. Then it came back. They came back to what? Take out the distance, which is the liquidity. Then come for the momentum, which is your other block. Then after that, they shift momentum again. So this will have been my first sell at that range, and this will be my second sell. So after having my second sell, what do we have again? We have another A, we have B, and we have what? C. Right here. Why is this one not the C? You can see this one only push. It did not break any structure. But this is our real C. This one is not valid. This is the real C. So this is the weak low. Because now it broke this structure, it broke this structure. So now, drawing my fib, I don't even need to draw my fib. I just need to investigate where there is imbalance where that distance is. So looking at this chart, you can tell that this guy is my distance. So seeing that distance, market came, took care of the distance, then get to what? The other block and sell off. After that happened, but you can see that after that, you sell off. Let's say you even sell off from here. You even sell off from here, you will have still be in the profit because this is where your stop loss would be. So now markets keep going again. They took care of this guy, they broke structure. So which means we have a new A, B, sorry, A, I'm coming internally, I'm coming. Should I explain this now? A, B, I'm coming, and C. Why did I choose this as the B? You can see that we have low, high, low, high. Market broke structure here, then it pulled back at this B leg. So which makes this guy the liquidity. Then the market came, clear the liquidity, then mitigate it properly right here. So now a new cycle start again. We have a low, high, low, high. We have a new A right here. A, B, and C. So now what happened after that? Market came again, took care of this guy. After I draw my fee, I don't even need to draw my fee. I just want to see where that B is. And I'm going to explain you most time how B used to look like in this session too. So now B leg, then we have our momentum right here. So market took out the B leg in that range, then it mitigates. A new cycle will start again. Over and over and over and over and over again. So now we keep going. So now we have what? A new ABC again, which is A, B, and C. So now in this ABC, this guy now is my liquidity. And this inside here is my distance. Right? I'm coming. That guy there is my distance. Then what did the price do? What's in with this? What did the price did? The market took care of the B leg. In this particular day, I will have been waiting for price to come here. Actually, I should not lie. Like, I will have been waiting for this guy. I'm coming. Sorry, guys. But there is a way I will have gotten. I will have been waiting for this reclaim block. One of you guys made a mistake today. And your mistake was, I will refer to it for you guys now. I'll refer to that mistake in the next class. You made this mistake on EU. Let me show you. This was the mistake you made. And the guy that made that mistake would see exactly what I'm talking about now. This was the mistake. You made this mistake. This one is going to buy you, but time is not in my favor. You made a mistake. You call this flip zone, which is correct. So if this is your flip zone, you are now anticipating to take a sell from this other block. How? How? Let me clear the chart. You call this your flip zone. Your flip zone is supposed to be responsible for your entry. So this guy is your entry. Investigating this flip zone, when you go to 5 minutes, you can see your drop base drop there. You can see drop base drop. That base is the entry. If the person that made that mistake is here, the person should signify. Like, this is your flip zone. Why do you label it as a flip zone? It is a flip zone because market flipped it, right? So